The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here today, Monday through Friday, 12 o'clock till noon. Obviously, Wednesday is going to be a holiday for the late passing of President Bush. So let's look at this market. Over the weekend, we saw the market moving Friday and the last hour. We saw that was a kind of a precursor to an anticipation that perhaps over the weekend there'd be good news. Over the weekend there was good news, and the futures opened up yesterday. I mean, they just gapped up huge, and overnight they were up 50 points in the S&P, over 500 points in the Dow. I mean, that's big stuff. You really have to have a tremendous amount of relief and a tremendous amount of potential action from that is precipitating that kind of a rally. Well, the Dow opens sharply higher. It opens at 25,779 and then runs 200 points higher. It goes to 25,980. Now, 26,277 was the high back in November on that midterm election gap up and a follow-through session. We've just had the same type of thing happen, and you can see in this trend line here, I'm just going to move it a little bit to be a little more accurate right there. You can see this dashed line, and normally what I do, and I'm going to do that now, I make that green, and within that I have what's called the Chapman wave inside track repellent zone. If it breaks above that, that's really important, but most of the time, these little mini channels become almost like moats around a fort, and it's very difficult to break over it. Once you break over it, you're free and clear, because then that becomes a support level. Well, we went above it, but now we're trading back below it, and in fact, right now, the Dow is up 190 at 25,729. It's actually lower than the opening price. I don't like this. I must say, it's good that we're breaking away from the 24,122 low that was made on 29th of October. But at the same time, and I can't complain because we are long, my subscribers to my opening call, there is that island reversal, which I haven't heard anyone talk about, but there's a little island reversal over the last 6 days that were made back from November. I'm going to give you the dates. November the 20th, 21st, 23rd, 26th, and 27th, and then we gapped up. So last week, you've got a little island reversal in the daily chart. Now, this is really what I'm talking about, and let me just do this, and then I'm going to run the numbers. You see these rectangles that I outlined last week, and I said there's an arch formation from the 23,360 low January of 2018, and then is that January or February? February the 9th. Sorry, February the 9th, and then it ran to 25,800, and then made a U-turn, an actual arch formation, and went to a low of 23,344. That rectangle pattern I outlined as potentially the same kind of pattern we're seeing here from the low that was made October the 29th. Whoops. The low that was made on the week of November the 2nd. And now what we're looking at is a chance that we are matching this kind of arch formation, and that very soon there'll be some kind of a failure. We don't have to go back because we're making rising lows. We don't have to go all the way back to the 24,200, 100 area, but we could move back to the 9-period moving average around about 25,400. Okay, enough with that. Now let's get on with the story. I have a webinar tomorrow night. Tuesday, the 4th of December, 5 o'clock, till 6:30 for members of subscribers of my opening call. You can become a subscriber. It's actually it's a win-win because you can sign up, you can get the webinar. You don't have to do anything, just get the webinar. You will get my newsletter for a month, and you have a 1 month, and you can cancel anytime for free. So that's really going to be very important. And here's why it's important. I don't think too many aspects in the market have changed. And here I'll show you as we go through the charts. Look, the Dow went right up to that resistance, pulled back. The MACD rallied sharply, but it's not great, but it did rally sharply, and the stochastic still only at 59%. That means it could get to 80%, which is the area I love, but it could also fail here. So we got to watch this very, very closely. The S&P also pulled back very sharply from the intraday high. This is in a leg A. It's only a single leg A to the upside. The last time it made a B from the 2603 low in October and ran up to the November high, just at 28, I think it was 28.15. And then it pulls back to 26.31 and has another arch formation. These arch formations, are, for me, are notorious in that to break sharply above it, to make the dreaded H pattern become a cup formation, takes a lot of work. Okay, so if you look at the weekly chart also resembles quite a little bit the pattern that you saw in the lows that were made in January, February, March, April. And now we'll see whether there's going to be a failure. A failure would mean that the S&P goes below 27, let's say 27.50 is the start, and then 27.27 in December, instead of climbing into the 28, I'd have to put it into the 28.40s. All right, QQQ, 1, 2, 3, here we go. QQQ right now is trading up 2.28, up 1.34%. The Dow's only up 0.75. The S&P is only up 0.70. So this is the stronger. It was the weaker before. Now it's the stronger, trading towards the low of the session so far. But it is at 171.59. This is another cup formation, but the last one failed. This has to be spectacular. And this one has to take the cues into the 177.50 area to say, hey, now we've got something impressive. It could do that. I'm just saying it hasn't done it yet. And the level of support that has to hold is 160, I'd say 167.50 to 166.30. Closing below that support area would be very negative. And now we're going to go to the IWM. I had a nice email saying, will IWM stop the Dow General from moving the soldiers up and bring the market back south, falling the back in line with the overall market trend? Because the last of the good news is out. Well, that's really summing up the statement. This is what I was discussing last week. I said the IWM is still the weakest link. It's telling me that a lot has to happen for it to join the crowd. It hasn't done that. So yes, I kind of agree with that the generals can't lead without the soldiers, and the soldiers are really kind of struggling right now. So the IWM down 0.005, down 0.04%. It's really saying, I'm just not ready. I need a lot more to be able to get traction to the upside. We'll talk about gold, dollar, euro, the yen. We'll talk about bonds, and we'll talk about crude oil as soon as I get back. Basil Chapman, Packet this hour. Don't forget my webinar coming up tomorrow night. It's going to be really interesting. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, so Dow's now up 190, S&P's up 20, and I want to go to gold. I want to show you something that I think is worth noting. Look, gold is having a really good session today. It's one of the strongest green candles, but we've had strong candles like this intraday before, but they haven't held. So far, this is showing signs that there is some buying in the gold. Now, I'm not 100% sure what the reasoning is, because nothing has really changed, and this is kind of an inflationary thing, but it is up 13 at 12.39. If you look at the weekly chart, it's just in an up channel that has been making higher highs and higher lows, but really kind of a pathetic move when you think of how it's come down almost in a straight line from the 200-period moving average back at about 13. Let me give you the number. In June, it was at 13.29, and then it plummets to 11.67. Now it's at 12.39. So it's not quite halfway there. No, it's about 1/3, a little more than a third. So this is going to be interesting for me, because within the context of looking at gold, is silver leading or what is silver doing? So gold is up 1.10%. Silver is up 2.17%. But this is so typical of silver. Look, has a fabulous day. Once again, just as it did back on the 21st of November, ran up to the 50-period moving average, is 14.677, and then plummets down and goes all the way back to the 14.11 area. And today, boom, from 14.11, it's gone up to the high of 14.645. Trading now lower than that at 14.53. Now, the reason why I want to make a big deal about this is that I still see gold and silver trading in a range. And until they really break the range, I want to see silver trading for a couple of weeks above 15.25. I want to see gold trading probably, I would say, it needs to break above the high that was made in October. It needs to go to 1259 is the 200-period exponential moving average. It needs to be trading in the 1263. Then I think we're looking at something completely different. Gold then is in play, and then you should see the gold stocks move very well. However, this is really the issue. Look, the dollar down 32 cents at 96.91. is still holding that beautiful Chapman Wave inside track support zone. Talking about Chapman Wave, I'm doing my webinar on tomorrow night. I'll be doing some, as I always do, Chapman Wave methodology. The real objective is how are we going to try to approach this coming period of 1 to maybe even 3 months in a very cogent way without wasting money with trying to get specific stocks. We've already, for those of you who are signing up for my webinar for tomorrow night, you know that we already, from last week, we've been planning this whole thing in preparation for this webinar. So when the webinar comes, we'll add to positions, but we're already trying. I don't know if it's going to succeed. So we've got an infrastructure stock, a stock that always is either in or it's out, or it's in or it's out. My thinking here is that there's a chance that it is back in to fund managers' sites. I won't know until our positions that we picked up this morning are successful. As of this very second, they're successful. This is one stock, 2 positions. It's not even 3 hours into the day. By the end of the day, this particular stock has already had 1% moves up and down and up and down. It could be anywhere, but I had to experiment. I had to say, I don't want to be buying Amazon right here. I don't want to be spending a huge ton of money. I want to buy really inexpensive, low price stocks, inexpensive in price, but not inexpensive in capacity to do well in this environment. So that's what we're looking at. I hope to add some more. We'll get to bigger stocks as we move along, and add in another one in the financial area. This one's a little riskier in that sometimes it just goes on its own way, and sometimes it really corresponds to the machinations of the financial sector in general. Really low price. I hope people didn't get carried away. I say, just let's get a position. This is just like a feeler position. We'll see what happens. All right. Now, within that context, what we're looking at here with the dollar, and the dollar we've been long since the beginning of April at 90.07, is at 96.92. It hit 97.67 on the 12th of November. The weekly chart has failed to get to the peak C yet. To go above it for leg D. Ironically, the UUP, which is our trading vehicle. What's the question I had here? Someone asked me a question. Sarah wanted to know. UUP dollar down on day favors OEX up 0.8% versus the RUT. Okay, so let me just say that I've got a peak F already in the UUP. I'm fading that in the Dow. That's a little upsetting. I like them to be together because it's going to be confusing, right? But in the meantime, the weekly chart in leg D is holding very, very well in the UUP. That's a trading vehicle, power shares, DB, US, dollar bull. And we have been bullish since, as I say, beginning of April, from 23s and 25.80s right now. I don't know what to say. I can just tell you that if the dollar, I'll go back to the, I'll go back to the dollar. This is the dollar index. If the dollar index starts trading underneath these 2 trend lines, this is the green line, is the key first support in the Chapman Wave up channel, and that's called the inside track support zone. And the really important support will be that dashed red line. A close, I'm going to give it a little room. A close under 96.30 in the dollar says, oh, be careful, consolidation yet again in the dollar, and we'll see what happens in gold. All I can say is this is what we're going to be looking at. Now, I mentioned the inside track. A week from Friday, on the 14th, I'm doing an all-day webinar. For those of you who know my work, the Chapman Wave methodology, you know my myriad techniques. I'm going to be going through these things. It's called entries and exits. Now, of course, between an entry and an exit, there's a lot of room, but I'm going to be covering patterns that I know work, patterns that I think are really important, and it's going to be studying techniques that apply to no matter what time frame you're looking at. But we will do it in the regular time frame, like a daily chart, but we will practice in the 2-minute, the 5-minute, and the 10-minute to get a sense of daily, weekly, monthly charts, so we can hand off the short term to the next intermediate term if the technicals in the daily or in 2-minute chart are really good, then we can go to the weekly or the 5-minute, and you'll learn how you can keep a trade as we have with the dollar for quite a long time. We did that with UTX. We had it for a very long time. When we got it in the 119s, it ran up all the way to 144, and on the way up we were taking profits, and then we got stopped out for the final position. So yeah, this is so it's going to be an all-day trading session. Two parts to it. Part 1, 9 o'clock till noon Eastern time, and then 1 o'clock Eastern time until 4. But then 4 to 4:30 we'll do a wrap up, and I'll try to finalize any questions that weren't answered. And I'll follow you for a month. You can just, we'll be in contact. It'll be very interesting. So the dollar is holding really well. EUR-USD, the euro-dollar currency pair, is just in the sideways range, and the USD JPY, which is the yen, is trading right now, if I can hit that button. Yep, it's trading up also in the upper part of a rectangle. I'll be right back. How's it, 290?
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So here it is. Basil Chapman presents a webinar for the opening call subscribers. What's next for the market? Tuesday, December the 4th, 2018, 5 o'clock till 6:30 p.m. and archived on your page. So you'll be able to see this as you go through it as many times as you want. Topics, what to expect going into the start of 2019, sectors that should rally, which are weak, stocks to consider, levels to watch in each index. I think this is a preparation for 2019. Really, I think it's a very appropriate and very apropos to where we are right now. So that's going to be, as I say, tomorrow. He has the E-mini coming back very nicely after pulling back to the, wow, it hits a high of 2,814 round number high, drops to 2773. That's like a normal day's work for it. It's 30 points, right? Except it was 50 points, and now it's trying to come back. I don't think this is too early to, let me just get back here, to talk about the week, even though Wednesday the market is closed. I think that what we're looking at, we're going to have very specific parameters to watch. You're going to have levels. I was asked about a trend line. Look at this trend line here. In the webinar that I'm going to do, the all-day webinar, I'm going to show you how to draw one simple, look at this, one simple technique. I take the top of the yen, USD JPY currency pair, 114.58. The high of, that was October, I think it was the 3rd. Yep, the 3rd. I lost the 3 right there. Let's get it back. Right there, 3. Got it. At peak F, and look, it pulls back very sharply to the 111s. Then it rallies back to the high that was made at peak C on the 12th of November to 114.21, pulls back again, makes a higher low, and this time it runs up and it stalls. Where does it stall? Right at that trend line. So I'm going to make that trend line green, and inside it I'm going to quickly put, and you could draw these if you don't have the tools. Almost every package has a drawing tool, so you should be able to do that. But you could just print it out and just take your ruler and draw it and say, okay, there's my line. And that says we're right in this area. A break over this Chapman wave inside track repellent. Remember the other one was propellant. This is a repellent zone. Would be very positive and suggest we're going to make at least a leg D above the high of 114.21 on the 12th of November. I was asked about the Dow. Then it hit the top downward channel line. So this was, let me show you here, the INDU. Yes, that's the line that I was talking about. Same line I'm talking about. Now, sometimes you can get it equidistant. Now, Larry Pesavento has a beautiful technique he developed from, I can't remember who it was, and there was an exact measure which I've used for years. I use it as a different technique, but it's basically the same. This one didn't do that. This was in a shorter time frame. But there's the H to lowercase m pattern. So whatever happens after this moment into the afternoon session, if there's a new buying spree, that's going to be really important. If there's a selling spree, you know, I think that selling spree was just the overdoneness of that big move up, and now it kind of went to par, and now we're starting to see the real action for the day. Dow's up 250 right now. It's up 60 points from where it was when we opened. So yeah, that's the trend line. And all it's saying is that the gap wasn't filled, but there's a good chance that the most important support now is somewhere in the 25,620s for the Dow at this particular point. Okay. Next question I had was, yeah, the next earnings releases in January won't have the increase from tax cuts like we saw in 2018, so we won't get further gains. Hey, that's a good point, Sarah, but there are other things that we're looking at that might take its place. So let me get out of that. I want you to go to the TLT. The TLT is Lehman Bonds, 20-year Treasury bond ETF. Nice candle today. It's only down 6 cents at 115.27, having tested this black line's the 9-period exponential moving. Sorry, the 14-period moving average. The green one is the 9-period moving average. MACD's good, stochastics, okay, it's not great, but there's a nice candle, and it's saying to me that we've got to watch bonds, because I'd say that yields, bonds and yields should be in a trading formation, and that is a kind of a sideways move just for now. We'll see if it can break out and do something different. But at this particular point, I would say I need to see 116.50, $1.25 above, and then I'm going to say to you, aha. Then the TNX, which I showed subscribers to my opening call over the weekend, in the daily chart, had a double bottom 30.08 low, and today it goes even lower. It's right now trading at 29.99, having already hit 29.92. So this means we've broken that trend. See, this is the same trend line. This one I'll make red because it's on the downside. And above it, I would have made, if we did rally a little bit, I would have said, hey, we've got the inside track, and that resistance would be somewhere around 30.30. Right now we're at 29.99, having gone below the trend line. And yeah, in the monthly chart, in the weekly chart, look at this Chapman wave up channel with the Chapman wave inside track propellant zone. That can give you support all the way down to 29.40. So this is going to be a really important week for bonds. Let's go to, we did that. Oh, crude oil. Final one is the crude oil. Here we go. CL, crude oil at CL. This is the crude oil continuous contract. Try to fly higher today. It went right to the green, the black line, which is the 54.02 level of the 14-period moving average, and the pink line here is 52.43. It's right on it at this moment. I see it subscribes. We can expect that oil's going to try to rally, but the weekly says there's a lot of work that needs to be done before it can actually hold any rally. It needs to close decisively in the 55.50s, at least for one whole week. That close has to be above 55.50. And I'll say, okay, nice little turn, maybe one little test to the downside, but we're ready to have a pretty decent bounce to the 58s. Hey, we'll see if that can happen. Now, another question I had, which I thought was a good question. Yes, let me look at this. The IYT. This is the IYT, is the transportation iShares, trading up 1.84, up 0.94% at 197.14. This is leg C, broken out of the rectangles, inverted head and shoulders. This is the first real sign to say December could have a pretty decent rally, even if there are pullbacks, if it's assisted, and I think this is going to be important, assisted by the IYT, which is the iShares Dow Jones Transportation Average Index Fund. Whew, long name, because look at that monthly. The monthly had a horrible candle 3 months ago in October. November was a pretty good candle, closing above halfway of that ugly red candle. And now we've already just begun the month, and we're above it. That's a good sign, even if it's the first couple of hours. So far, the IYT, the Transportation Index, is just giving a little heads up to say, not bad action. Boeing, yep, there we go. Boeing is up, surely. Yes, gaps up. Well, this is the whole China thing. So gaps up huge. Now it's trading above halfway from the high that was made, all-time high that was made, and was at 394.28, October the 3rd, and the low that was made at 296. 100 points down, but it's just gotten 60, 70. About 70 points up. Hey, that's pretty good. I'll be back. Basil Chapman, Tiger Ignitions Hour, Dow's up 268.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I'm going to draw this trend line in right here from the 394.28 high. Be a little conservative. I'm not taking to the outside of the candle right there. This is Boeing. And what happened is today, not only did it gap up, but it gapped up right at that trend line. The close on Friday was 346.76. The open today was 364. They reversed the figures. 364.31. Round number 369 high. Let me type that in. You know me and round numbers. 390. Remember the S&P today made a round number high. Round number high, just for this, it's the day. Anything can happen. If it gets taken out, I just take that away. It's just an observation. It doesn't mean anything. I'm not shorting it. I'm doing anything with Boeing right now. I'm looking at it and saying, "Ooh, that was a big move." Going from the 396 level to from 296 to 390. It's 100 points in a week and a half. So, got to be impressed with that. But the MACD and stochastic are really good, but they're not strong. So to be strong, Boeing is going to have to stay up in the 350s for at least a couple of days or higher. And then you're going to see the stochastic move to the 70% level or higher, and the MACD will start to see the histogram move a little stronger because you need some follow through to the upside. So far, it's good action. I'm not saying it's not good. And especially in the monthly chart, saved the day. Believe me, it wasn't looking very good at the bottom below 300. So, yes. And now look at this trend line. So the webinar I'm doing in 2 Fridays' time, I'll discuss as we move along. I'm going to give you techniques. How simple can you get? I'm drawing the top peak D right there, 394. It pulls back sharply, makes another peak. Doesn't mean a thing to me, except I'd already drawn in the Chapman wave falling axe formation. I'll show that. I'll be using my CD, introducing the Chapman wave methodology as a nice setup to be able to also have copied and given each individual certain pages that are really important from the CD. And this falling axe formation says, and what is that? That's lower lows in a cone from expanding cone formation and lower highs. And eventually there's a turnaround with an attempt to get back up. And this one broke that trend line down. Look, 2 peaks and I can draw a trend line. It's simple. And look how much information it's given me. It says, if this whole can't hold and Boeing starts to trade back in the 352 or lower area, then this becomes the repellent line. Watch it, because once it closes again above it, that's going to be positive. All right, so this is just an emotional gap up opening on a Monday. Anything can happen for the rest of the week. The next question I had was, I don't know if I saw it here. I saw it, someone sent me something. What about the XLF? Well, I mentioned the XLF to my subscribers to my opening call because there are a couple of stocks within it, but we decided not to do anything in the XLF today I don't mind chasing it if we've now got the trend change from negative in the weekly chart to positive. So I'm just holding back. We do have a financial. It's a little below where we entered it, but it's a very low price, and it's just really a feeler for things. So the 29.07 high that was made on the 20th of September, that alternate count peak D, remember that's what I said it was, went down to 25.024 full points. That's a big move down to the 26th of October. XLF Financial, S&P Select Index ETF has gone twice to the 200-period moving average, and it's really struggling to close above 27.29. I think there's time. So because of the XLF, I'm going to go to the KRE because they are in the financials, but different sectors of the financials. And that is a slightly different. In some ways, it's a little bit more positive because it's already fulfilled a number of its downside obligations, and one is to go to the 200-period exponential moving average in the weekly chart and then bounce off it. What is the KRE? The KRE is the S&P Regional Spider ETF, and it's gone to a peak D, a leg D right now in the daily, and it's a leg B in the weekly, and the technicals are improving a little bit. I've got my eye on this, and I'm going to be talking about this tomorrow night because there's a little difference between the regionals and the what do they call those, money center banks like JP Morgan, etc. So this is saying a little more strength. Not a great chart pattern yet, certainly not in the weekly, not in the monthly or the weekly, but it is improving. And it's in a sell mode in the daily, the weekly, and the monthly, like a little hat trick top. So I'm watching the KRE very closely. Next thing, I had got a lot of questions. XLI, yeah, the XLI. Now, this is important because this is Caterpillar. This is really, the XLI is the real industrials, unlike the Dow industrials, which really are, come on, give me a break. Home Depot is not an industrial. Merck is not an industrial. American Express is not an industrial. It's just called the industrials, and they just keep changing. Microsoft, I would not say is an industrial, but the XLI does pretty much have mostly industrials, and it's gone to the 200-period moving average at 73.47, up 93. High was 74.46. It's a point off the high. It's starting. It's an attempt. Now I'm going to take just a moment to do a couple of quick things. One is. Where? Oh, just I wanted to show you the E-mini. So the E-mini goes to a peak E in the 2-minute chart. It goes to 2788.75 peak E, and then it pulls back sharply. It's only a B in the 5-minute chart and only an A in the 10-minute chart. So you see the patterns that we're looking at here. This is what I'm going to be discussing. We're going to be using technicals in a way that is so educational all day. In the morning, we're going to be studying and practicing and practicing. I'm going to, each one of you, I'm going to say, practice it. What do you get? Show me what your reasoning is. How far is it above this? Where is it? Did it give a buy signal to buy mode? Is it close to getting rid? Do you want to add? Do you want to add to this position? How would you add? Where would you put a stop? Would you have two positions, one that has a stop, one that doesn't have a stop at the same level, so that you can treat them as one gives you your core position and the other becomes sort of a trading position? Or you want to just feel solid about this, you want to stay in it, and you want to get to a D or an E in the Chapman wave, and then you're out, you're done, because that's all your objective is. And this is what we're going to do. And look, I'll show you the importance. Look at this 200-period moving average. The price goes right to it, gets repelled, pulls back, and then comes right close to it, and then gets repelled again. These are really important. They're such easy techniques, and you can apply them to all your charts, to your portfolio, whatever it is. You just do an analysis, and you don't even have to act on that analysis until you feel very secure, because you can practice and practice. I practice all the time, as many thousands and thousands of times as I've done these, I've bought positions, I've done different things. I still practice. Why? Because it's like playing tennis. I mean, I don't play tennis like I did in my youth. I actually played better. I played better because in my youth I never really focused on things. I used to just smack the ball. Now I'm playing better. But I don't have my youthfulness, not like I used to, so I have to be very strategic. This teaches you how to be strategic. I practice that strategy. I'll be back. The Dow's up to 23.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, we're back. So now let's do a couple of things. A couple of good questions came in. XLP. Let's see. Oops, I wrote them in the wrong place. It was supposed to rhyme, Jay, with that you will find. So let's go to what did I say, XOP? XOP. Yeah, this is going to be important because the XOP, which is the S&P oil and gas, remember, this is all notated. So it goes to peak A, B, C, goes to a peak D on the 4th of October at 44.81, has a little bit of a slide to 32. I'd say the 12 points. 30-something% decline. Now it's in leg B. Yes, I think that crude oil and the XOP, where did I do that? Just immediately off the top of my eye, you're right here. I can see a left side, right side, almost a price time match with the arch formation, peak A, B, C, D, D as well in July at 45.45 for the XOP. And it's pulled back, made a doji candle and a nice move up today. I think there's a bit of a bounce coming in the XOP. I think there's a little bit of a bounce coming here in the crude oil. I don't see a huge move up. I think first a bit of a bounce, a retest, and then perhaps mid-December, maybe the second week, maybe next week, later next week, we'll see where the crude oil starts to move to the upside. There was, in fact, right here in crude oil, look at this continuous contract in the monthly made a peak E. That's a severe pullback from a peak E in the Chapman wave. Okay, couple of things. I'll be back at 3 o'clock till 5. Just a very pleasant opportunity to be able to do a 2-hour show, do Tom's show for 2 hours at 3 o'clock. I'll be able to go through a whole chunk of things. We'll see how all these different indexes, how the financials, how we didn't even talk about Amazon today. Amazon had a real big move up. 72 points at 1763, made a round number 1420, low on the 20th of November. This is important. There's that cup formation. I'm going to talk about these when I come back for Tom's show at 3 o'clock. So this is an exciting day for me. I'm looking forward to it. Don't forget, go to the front page of TFNN. You'll see all about my webinar coming up tomorrow, Tuesday, 5 o'clock to 6:30. Stay tuned for programming. And once again, I'll be back 3 o'clock till 5. The Tom O'Brien Show. Stay tuned.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.